Richmond's economy is finally starting to show some progress, but the apartment market here took a couple steps backwards in the past couple quarters, and there still remains a substantial performance gap between newer and older apartments. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Richmond update. Back in March, when the Bureau of Labor Statistics revised its employment data for 2011, Richmond was one of the big winners. Having previously reported job losses in Richmond in 2011, the BLS is now showing gains of more than 6,000 jobs in 2011, as you could see, and that progress continued into 2012's first quarter. 10,000 jobs added year over year as of Q1. That amounts to an expansion rate of 1.7%. Certainly encouraging to see. Prior to the revisions, the BLS was reporting very minimal job growth across pretty much all of Virginia, with a notable exception of the Washington, D.C. suburbs in the northern portion of the state. The revised job numbers correlated to what we saw in the apartment market for much of 2011. Occupancy got as high as 94.7% in Q3 2011, but took a hit in Q4 and recovered only a chunk of those losses in Q1, bringing occupancy to 94.3%, still up 150 basis points year over year. And it's a somewhat similar story on the rent side. This chart shows you year-over-year rent change by quarter. Peaked at 4.6% in Q3, which was Richmond's biggest hike in 4 years. But rent growth levels have trended downwards in each of the past 2 quarters. Rents up just 2.5% annually as of Q1 2012. That is 210 basis points below the U.S. average. And the slowdown has come due to quarterly rent cuts in each of the past 2 quarters. And drilling down a bit deeper, the story is very similar to what we're seeing across many of these southern markets that are still in recovery. Much better performances in newer apartments than in older ones. Take a look at occupancy by product age group. Around 96% in apartments built in the 1990s and 2000s, around 94% in the 80s and 70s, and just 92.8% in properties predating 1970, which represents a pretty good chunk of the Richmond apartment base. Similar pattern looking at annual rent change by product age group, 4.7% in the 90s, 3% in the 2000 plus stock, just under 3% in the 80s, and then in the 2 oldest product age segments, rents up less than 2% year over year. And in correlation with those trends, we see much better apartment fundamentals in the higher end, more expensive submarkets, downtown the Fan, and also Hanover County, and then weak fundamentals in more affordable areas like East Richmond and South Side. And let's highlight one of those for you. We'll focus on the good one, Hanover County. This is Richmond's only submarket with average monthly rents topping $1,000 per month. Occupancy there up 120 basis points year over year to 96.4%, and rents up a Metro best 6.8% year over year. And looking ahead, if Richmond's economy continues to show solid progress, that should allow occupancy rates in those bottom tier properties to continue to improve a good bit, but rent growth will probably be more concentrated in the newer properties where occupancy rates are already higher. Overall then, we're expecting a pretty decent year for the Richmond apartment sector. And that wraps it up for Richmond. So until next time for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.